Welcome to Policy on Demand. I'm Sindhu Bloom. If you've been looking for tax penalty relief related to the corporate alternative minimum tax, the government is providing it. Joining me to talk about a two-step process to get that relief is George Manousos. George, thank you so much for joining me today.
My pleasure, Sindhu. Good to be with you.
So, George, let's get right into it. CAMT was enacted as part of the Inflation Reduction Act. Can you refresh our viewers on CAMT and how it applies to corporate taxpayers?
So it is a new tax. It's an alternative minimum tax. It begins for tax years beginning in 2023. It's very similar to the old AMT that was repealed with tax reform in 2017, but you have a different starting base and you have different adjustments. Instead of starting with taxable income and having certain adjustments and preferences, we start with our financial statement net income, and we make different types of adjustments to come up with what's known as AFSI, or adjusted financial statement income. And instead of a 20% AMT rate, it's a 15% AMT rate, which is compared against our 21% regular tax rate. Now, it's a two-step process. You only are subject to alternative minimum tax if you're an applicable corporation, which is a taxpayer that had average AFSI of $1 billion or greater for the last 3 taxable years. If you satisfy that test, then you have to get into the computation of AMT. If your AMT is greater than your regular tax, then you owe AMT, you pay the greater amount, and that delta above regular becomes a credit that you can then carry forward and utilize in future years when regular tax exceeds AMT.
So the notice has some penalty relief. Talk about the significance of that.
This is much needed guidance. We have a statute and no legislative history. We have 2 notices. One covers certain areas of depreciation and other areas dealing with M&A transactions. And the second notice was industry specific to the insurance industry. So for the masses, we have very little guidance so far other than the statute. And because of that, taxpayers in computing their estimated taxes were not aware of, well, how do I answer some of these uncertain questions? And effectively what the government has done with this notice is they have said that you can pay your estimated taxes for your 2023 alternative minimum tax year as if CAMT didn't exist. So do your regular computations. You don't have to guess or estimated alternative minimum tax. Pretend like it doesn't exist at all, and pay your normal estimated taxes on that which you do know, which is your regular business activity. However, it's not a waiver to pay the minimum tax if you actually owe it on your return. That will be due under the normal processes with your extension or with your tax return.
You mentioned the uncertain questions, and the notice is intended to provide some relief in light of uncertainties. Can you elaborate on some of the uncertainties?
Yeah, so the government's received over 20 comment letters, and some of them read like a short story with 50 plus pages of commentary in one single letter. Numerous issues. I'd say among the more important issues and the very commented on issues are certain international issues dealing with the so-called double counting of income and dividends, as well as questions dealing with foreign tax credits, partnerships, and how do I compute my distributive share of partnership income? We don't know what that means. Will the government provide relief for extraordinary one-time items that might cause someone to be an applicable corporation when otherwise they would never be one from their normal business operations? The treatment of OCI or other comprehensive income, is that included in the computation? And probably the biggest one is the treatment of financial statement unrealized gains and losses and mark-to-market adjustments. Are those going to be included in the computation? Basically, universal requests to not include those.
All right. So if you are a taxpayer, what do you need to do to benefit from the penalty relief?
Yeah. So there's basically 2 steps that are provided for in the notice. The first one is you have to complete the form 2220, which is the underpayment of tax form. Even if it shows 0, you must complete and attach that to your return. Secondly, you need to report 0 on the estimated tax penalty line on line 34 of the form 1120. You want to do these 2 steps. Usually the audit of estimated tax is computer generated, and they're trying to probably just trip the computer to make sure that it's showing and it knows that you did not have an underpayment of estimated tax due. So you want to make sure that you include both of those steps. And the government noted in the notice that they do intend on updating the Form 2220 instructions to reflect the guidance that's provided by the notice.
All right, George, I really appreciate you taking the time to walk through this. Thank you for being here.
My pleasure, Sindhu. Take care.
And thank you as always for watching, and stay with Policy on Demand for the latest developments in Washington and around the world. Take care.